Ownership. People care more about the things they own than the things they don't. When customers own your stock, great things happen. They spend more. They tell more friends. They shop more often. And they stay with you longer. Imagine if there was an easy way for all your customers to buy your stock directly from you. Now there is. It's called the Customer Stock Ownership Plan, or CSOP. Customers buy your stock from your Facebook page or website. Just 3 clicks. Invest as little as $10 and pay no fees, ever. It's the ultimate like, and ownership changes everything.
Well, thank you. We're happy to be here. With me is my board director, Chris Kelly, and I'm Barry Schneider, CEO of LOYAL3. We're going to do a live demo in a second, and I wanted to give you a quick introduction to our company. At LOYAL3, our vision is democratize the capital markets, making stock ownership easy and affordable for tens of millions of everyday Americans. With our technology, people can invest in their favorite brands directly from those brands' website and Facebook page. In just 3 clicks, invest as little as $10 and pay no fees to buy stock or to sell stock. In fact, pay no fees ever. And so you may ask, what's so disruptive about that? Today, only 18% of Americans are invested in companies. 18%. 50% want to be. Now, most of you would invest $50 a month in your favorite brands, about 5 of those brands, or $250 a month. And we know that because that's hard quant data from Opinion Research. And since we've launched in May, our experience is just about on top of that. We're slightly less than $50. So if you're investing $50, you can't buy Google stock. You can't invest in Apple. You can't even invest in Coca-Cola. Now, imagine you find some stocks that you do want to invest in. You're paying a $10 fee, and that's 20% commission, which means you're really out of the market, which goes to that earlier statistic of 18% of the people being in the market today. It's a small wonder that people feel so disenfranchised. It's a small wonder that we have a movement such as Occupy Wall Street. It's as if the middle class is being slowly and quietly assassinated. And we want to change that. We want to bring individuals back to the marketplace. That's the disruption. And we can do that, and we are doing that, through making it as easy to buy stock as it is to buy a book on Amazon. To invest as little as $10, because our technology is all about fractional shares. And to pay no fees ever. And that's our business model. Pay no fees ever. So with that, I'd like to run through a live demo here with our CTO, Matt Ho. Matt? So here is the actual Facebook page of Lucky Brand, which is one of the companies owned by Fifth and Pacific. Others include Juicy Couture and Kate Spade. And so if you're one of their fans and you're on their page, this is what you'd see, and you can click on Lucky Investment. Now imagine, you're on Facebook doing commerce. You're going to buy stock on Facebook. We get to the landing page, we lay out the value proposition. As a consumer, you're interested. Now you're on our platform, on our servers, secure. And we've got a video that's a demo video we're not going to play today. You can go on our website and check it out. And again, it's a fully branded site because you're engaging with the brand. So let's start. You get to now fill in your information. It's very notable that once you make your very first transaction on our platform, you never have to do this again. Now you get to choose what you want to pay. And as you can see, it's productizing the purchase of stock. It's really making it like buying a product on the web. And here, let's choose any amount you want, Matt. You can do it one time, or you can do it monthly, and you can actually put in an amount up to $2,500 if you want to do a custom amount. And so now we're going to sign in. And as I said previously, the second time you do this, you're not worrying about the sign-up process. In about 2 minutes, we're going to buy stock from Fifth and Pacific's Facebook page. People often say, geez, with this disruption, what do the other competitors say? What do discount brokers say? And when you look at the statistics and you see that 82% of Americans are not invested, there's not competition. We're growing the market, which I think most disruptive companies do. You can use a debit or credit card, a checking account. You can even use loyalty points with some companies we're talking about now. Everything's electronic delivery. Keep costs down, ecologically friendly. And that's just about done. So I don't know how many people in this room have bought stock before, online. Less than 18%. Here you're in a checkout stand, and I'll ask any of you people, have you ever seen it this easy to buy stock? Click, you're done. We just bought $25 of stock from the Facebook page of Lucky. And the important part is not buying the stock, it's getting the ownership in companies that you want to affiliate with. It's forming capital in a new way that's going to create a lot of new capital formation in a very different tranche, people that have not been in the market. And then probably the most innovative part of this is that we're going to now tell our friends about it. And for everyone in this room, the Facebook widget is old news, no big deal, every product company's got it. In the heavily regulated financial services industry, this is big news. We spent several months with the SEC to get this approved. Matt? So that I bought stock through a CSOP and paid no fees, that was negotiated, and that's what we can say. As a participant, you can write whatever you'd like. You know, I love Lucky brand jeans, now I'm owner, whatever comes out best. And then you share it. And this is a part that's so remarkable about social media, the distribution, the power, really, that people have with their community, because Matt's now going to go onto his own Facebook page, and there it is on the activity feed. That's the future. That's the power. That's amazing. Thank you.
Thanks a lot, Barry. So there are a ton of investing vehicles coming out there these days. Just tell the audience a little bit more about how this works, right? So the user doesn't pay anything. Who's paying? How does that whole process work?
So our model is that we work with the issuers, both in terms of IPOs, which we'll talk about in a second, as well as with public companies. They want to affiliate with the consumers and other constituents, employees, suppliers, et cetera. Ownership is really the most powerful loyalty currency ever conceived. People care way more about things they own than things they don't. So our fee comes from the issuer, and the beneficiary is the investor.
And so the company is covering all of the fees that a brokerage would normally charge the consumer. You guys take a cut of that, and in exchange, they get a large number of people who might not otherwise be buying their stock.
Absolutely. And
particularly at small amounts.
Absolutely. And it's great in terms of more loyal shareholders, and it's also great to have more loyal consumers.
So just looking through this, how did this come about? Chris, you were at Facebook. Obviously, there's a ton of interest in Facebook coming up to the IPO for years, right, in the private markets. How did that whole experience of being an executive at Facebook, seeing those issues lead?
The purpose of Facebook was always to build a platform that great businesses could disrupt other industries on too. When you add social into the mix, everything changes for the positive. And it took a fair amount of time to build out to scale at Facebook, and that was an exciting and wonderful process. But this is the next evolution of that. Obviously, expressing a like on a page is a way to connect, in a way to have an object that can be shared easily and potentially promoted by businesses. But this LOYAL3 offers the evolution of moving to actually making the consumers of a brand's products owners in that business, and doing it easily, no fees to buy or sell. And the survey data on what these owners will do is amazing in terms of how referrals will go up and how share of wallet will go up. We think it's a great deal for the brands.
I mean, not every company is Facebook, right? Not every company is going to have these multi-billion-dollar valuations, right coming up ahead of the IPO. How is this, you told me backstage that this is really going to help small to medium-sized companies. Why is that the case?
Because you've got access to capital. So many times, well, in this room, I'm sure there's a lot of innovative companies that would like to go public, but they're at a size when a lot of the big banks are going to shun them. They're going to have
like
trouble.
50 million valuation, or
Absolutely. I mean, it seems like today you're an orphan company if you're not doing a $100 million or larger IPO. Innovation is not about size. Innovation is about disruption and doing something better than the very next best competitor. And so when you've got a platform like ours that can bring new capital to the marketplace, that's going to make it easier for companies to go public.
Great. And so you actually have a company in the works, I believe, that has an S1 filed with the SEC, Professional Diversity Networks. It's a recruiting company. Just tell me a little bit about how that has worked with working with that company. Did you approach them? Did they approach you? How does the SEC feel about that? Just walk me through that.
So yes, there is a company that's filed an S1 to do their IPO on our platform. They're in a quiet period, so there's not a lot I can say about Professional Diversity Networks. A lot I'd like to say, but I can't. But for the process, we can talk about the platform and what that means. The first and most obvious is imagine all the individuals who can now invest in an IPO, and they can invest at the same price and at the same time as institutions. Not the first trading day, but actually the original IPO price. And as we already touched on, the impact for issuers is significant because you're now putting a new layer of capital that's available. Individuals will be able to invest $200 or $400 or $800 in an IPO at the same price as those that are investing hundreds of millions.
And so what did the SEC say when they saw this? I mean, it sounds like there's a lot of scrutiny. This is a different way of funding. They're hearing a lot of other things that, they're questioning about the Jobs Act or whatnot. How is the SEC feeling about this? How easy, for other finance startups who are out there in the crowd who are trying to navigate this, how did you do it?
So first of all, I was very lucky because having Chris Kill on our board, Chris worked in a lot of the regulatory and government outreach for Facebook and had a team put together in an ideology that you should be out ahead of any of these issues. And so here we were still developing our technology, and we were reaching out to both government and regulatory bodies. Once we had the technology done and wanted to move into the IPO space, we went and met with the SEC at our suggestion. And the first meeting was awesome. And we had 14 members of the SEC and 2 more Reg M specialists and a couple of our attorneys and Chris and myself. And I should say that it's been fantastic. Way slower than we would have liked. But we got ahead of the issues. And we talked about best practices. And we talked about the fact that social media, for example, is here to stay. And so let's figure out how to make it work.
Outreach can make a huge difference in these areas, and proactively.
There have been a few finance-related startups in Silicon Valley that have gotten in trouble because they didn't get the proper licensing. So your advice is to go out there. And
we wanted to do this right, and we've been excited by our collaborative relationship with the SEC.
And how do you? One big issue that people have been raising about all the crowdsourced funding is that these investors may not necessarily know what they're buying. you know, it sounds good. You know, if all your friends are buying a stock, you might want to buy it too, right? What if it's a bad stock? What if everyone loses their money?
Yeah, I believe that we need to have a balance. I mean, crowdfunding is great because you're talking about $1 million investment in startups, sometimes as much as two. You don't have a lot of the investor protections, but you're not investing a whole lot of money. I think the Jobs Act is a lot more interested in that it's to create jobs and access to capital, and that's a good thing. But it almost seems like our Congress is looking at two levers. Access to capital, meaning one, which is a really good thing to help create jobs, but the other is investor protection. And if the investor protection's down, then you have access to capital. And if investor protections go back up, like after 2007, access to capital goes back down. I believe that we should be able to do both. The Jobs Act takes away a lot of fundamental protections, transparency, S1s, Sarbanes-Oxley. And on our platform, we can create material new capital formation, and we can do so in a way that protects investors.
Because investors are investing in public companies and they can see all of this.
And they have
We want to
access
make the
to
risks
information.
crystal clear and provide more access to information.
Got it. Well, that's all we have time for today, but thank you very much, guys. Give them a big hand.
Thanks so much.